Hello, everyone. Welcome to Market Kickoff. It is Sunday, October the Hello, everyone. 12th. Welcome. And I am here with the magnificent Coach Jay, and we are excited to break down the markets with you. A lot going on. Jay just tweeted a note that said that somehow the news about a China tariff is just a misunderstanding.
Big misunderstanding.
So remember back in the day when we had Liberation Day, and then every day the tariff news moved us up and down. I think it might be a little bit of a redux right here if I were a betting man, but we're going to take a look at the markets overall and see what gives. So, Jay, what are you watching this week? What do you think is going to be interesting to trade?
I think what's going to be really interesting, Anne-Marie, is the equities. We saw the big sell-off on Friday, just looking at that daily candle in all of the equities. Major sell-off when we hear 100% tariffs on China. But then I was just, kind of paying attention to the space over the weekend. Got to give credit to where credit is due. My English teachers would always say cite your sources when you do anything. But the Kobisi letter on Twitter, there was a post that says the entire tariff crash from October 10th may have just been one big misunderstanding between Trump and Xi. The news about China's rare earth export came out October 9th at around 8:30, 26 hours before the president posted about it. But in their response, China said that the new controls are not a full export ban, and applications that meet regulations will be approved. So I think it seemed to be more a bigger deal initially than we thought. And on Truth Social about 4 hours ago, the president is saying, "Hey, you know what? I don't want a trade war with China. We don't want to bankrupt the U.S. or China." So we will see, right? Huge down day, one of the biggest down days we've seen in a long time. And I think the markets are going to respond to that. We already see crypto response in the crypto market because we know crypto markets trade 24/7. So we do have we do have the micro Bitcoin futures contract that we can trade. So I'll be paying attention to that as well. But I really want to see, do we gap down here, or is it, hey, you know what? We thought the tariff word was back, but it's not too much to worry about, and can we go rally back to all-time highs?
Yeah, that's a pretty good point. So, when I stare down things like that, I'm often reminded, and I cannot remember which trader told me this, but it stuck in my head and I never forgot it. And he said to me, listen, people lie, but charts don't. And when we stare that sort of thing down, what we notice is the following. As many of you know, I look at these areas of accumulation and distribution, And what both the ES and the NQ did, although I think the NQ came in about maybe a little bit over 3%. The ES came in a little bit over 2%. But what they both did was come into regions of prior expansion. So what we had was significant demand the last time we came into this 24,000 area. So I would not be surprised to watch traders duke it out. I like to call them the rock fight zones. I would not be surprised if we had ourselves a little rock fight. And the first thing we had was a reflexive bounce into frontline resistance. And so I expect that for the ES, I expect it for the NQ. So what does that mean to us as traders? We realize a couple of things. One, until and before September the 10th, price action was well below this 24,200. It tested it once before, August 11th, failed, came all the way back down to 23,260, and then bounced And so now what I think they're thinking is old resistance is going to be new support. Remember, this is a 50 simple moving average. The market has got a gigantic pervasive bid under it. And a lot of institutional managers who are running portfolios are caught behind the curve, and their performance is under the broad market of the S&P. So guess what they're going to do? They're going to try and buy the dip. Now, how do they buy the dip? We know they're pretty sneaky, right? They come in, they test the waters, they maybe make people think the market's going to fade just a little more, and then they'll find a really nice sweet spot and just hit the bid. I expect that kind of environment because, past is prologue, as we say. So my suspicion is the ES could potentially come into this VWAP at 65.20, maybe even down to 6,500, but we're going to bounce. Here's the real story. What happens after this first bounce? Do we make a lower high or do we make a higher high? And how long does it take us to recover? This is going to be really important for us to get a deeper understanding of what the broad mechanics of price action are doing, because we've got some bigger problems under the surface, right? And we'll see how earnings takes care of that. Long diatribe, Jay, but I'm expecting any kind of deep dips to still give us some sort of buy zone. But if we cannot get up over the close of the prior trading day, which is Friday, that's a bad sign. The moment we get inside of that range, buyers are going to try and move it up. But if we can't, there's another problem.
Yeah, absolutely. Let's take a look here. We got 7 minutes before the market opens. And what I'm kind of remembering here was, this entire rally up, and when we were in the middle of, the crazy kind of tariff, where it was every day we were hearing tariff headlines. There were some days where we had a pretty big gap down, right? It'd be a 0.5% gap down. And then immediately on the open, that gap down was the low tick for the day, and we'd see it rally, 1.5%. If I'm thinking about this, and again, if it is a misunderstanding, I could see markets gapping down just with all the selling that we had, but an immediate bid in the market. We'll see if I trade it. I do have some micros queued up. I know it's been some of the bigger trades. I know MP had one recently, a couple months ago. The S&P gapped down. He bought it right off the open because the bad news wasn't really that bad at all, and a really nice rally. Of course, any trading day is different. We can get a different environment. But what I'm kind of looking for is, we had this huge sell-off in the NASDAQ. I think it was almost 5% down because we continued to sell after settlement. We pretty much made a new low of the day at 6 p.m. Eastern time on Friday, which we don't normally see happen, right? I want to take a look at the so when the president announced 100% tariffs, that's here. So we had the major sell-off, and then after the close, the president announced 100% tariffs. So we had another 1% down after that. I'm really curious to see how this opens here. If I trade it, it'll be small size, maybe a couple micros, but we shall see. We shall see.
Yeah. Now, the next big thing that really happened is gold, right?
Yep.
Gold really came in and absolutely just made some monstrosities of the move all the way down and then, jumping right back up. As we could see, price action here. Oh, come on, for heaven's sakes. There we go. Price action turned bullish very quickly as soon as we recaptured maybe 3,980, something like that. And so 3,960 looks like a floor right now. in the trading formations. This is very interesting. What's going to happen here in gold? I still think it's a dip buying formation, but this selling candle on Thursday was very dramatic, and I think it's worth watching to see what happens there. I would be a buy the dip and sell the rally kind of person since it's caught in this box. I think we see some liquidation, but I don't know how much. And I just suspect we're going to have some pretty massive opportunities here. They're just hard to go, ooh, here's where you buy or here's where you sell. For me, as it sits, I'm going to look at the top edges to go short and the bottom edges to go long. And while they're arguing in the middle, I think I'll just watch. What about you?
Looking at gold, it looked like they broke gold last week. Looking at the daily, but this market is extremely resilient. Um, and we talked about this during the opening call on was that Friday? Yeah, opening call on Friday. The Thursday candle last week in gold was the highest volume candle, one of the highest volume candles we saw all year. Actually, I think it was the highest volume candle we saw all year.
Yeah.
So my analysis was, what happens at the lower extremes of this candle, right? Is this actually a sell-off, or are we just seeing some profit taking in gold? If you look at what happened on Friday, it looks like maybe it was just some profit taking. We held that low down near 39.56. And I think this market is continuing to be by the dip until it's not. We recently, the prior highest volume candle of the year before last Thursday was this one here. That candle sent us into that 130-day consolidation that we had in gold. This one's a little different because we saw volume building on the way up before that major spike in volume. I think we're talking about new all-time highs pretty soon here in this market again. 40.81 is that high, but
Yeah.
I doubt that we hold that level for the week. I'm curious. I know Hogue is out this week, but I'm wondering if we got any of his weekly kickoff levels. I don't see the Topstep levels updated yet. Curious to see where his weekly kickoff is now.
Yeah, that'll be super interesting. We could draw Fibonacci and just sort of eyeball it. But one of my favorite things to do is the simple accumulation box with just multiplying the range, right? So let's say that the buyers and the sellers have essentially been in this range, 4,080, 3,060. If we simply clone that and shift it upside, and it gives us a one-to-one expansion, 4,200 is on the horizon at some juncture.
Right.
However, if we are in some kind of reversal formation and the chart is telling us, hey, I'd like to give back some, that brings us down to 3,845. But to me, if I look at where old resistance, new support is, I mean, if this chart fades because they are simply taking profit or recalibrating risk or whatever, I mean, 3,500 is not something out of the realm of
We
possibilities.
do have the open coming up here in eight seconds. 8 seconds
Woo-hoo.
until the open. I'm looking at a NASDAQ chart here. Let's see how we open. And there it is. Huge gap up. NASDAQ trading 24,630s right now.
Gold gap down, but trying to fill the gap.
And there we go. There's your response. So markets seeming like they don't care about the China news. Gapped up. Pretty big gap up here. The gold gap down, Anne Marie. I'm going to switch over to my NASDAQ chart really quick. And here we go. NASDAQ trading 24,680. 89 currently. A pretty nice gap up here. Nice call by Alex Berry in the chat, saying they're pushing this open up. It's obvious that they're pushing this market up. If it's obvious, hopefully you're trading it as well and making some money off of it. I don't know about you, Anne-Marie, but I don't get paid for any call outs in the chat. Got to take the trade. So hopefully you guys are in the trades if that was obvious, because nice call on that open.
6683 is resistance in ES from, let me show you why. Let's do this one. For the ES, I normally like to look at the opening and closing formations. And so what we have here at 6683 is old resistance, new support, as well as the low of the highest 30-minute candlestick of the day. And so my suspicion is that's going to be the first place they stare down the price action. And so if I were looking to continue long, it would need to get up and over that level. Otherwise, it needs to come back and build structure. So a lot of times we use these words like build structure or put in a bottoming formation or topping formation. How would you describe a bottoming formation or a topping formation when you look at the charts, Jay?
It depends, Emery. So for me, let me switch over to my charts real quick. I'm looking at the daily. Man, this is kind of doing exactly what I expected it to do. Right back to 50% of that high volume candle from Friday. So for me, a bottoming formation, it depends, right? I have this 50-day moving average, which was down here. We can see that, we're accepting price above it. It looks like a turn. It could be a 3-bar reversal. It could be a rounded bottom. I think it really depends. Depends kind of where the volume is trading. Really, it shows up in different ways.
So can you go to the past and show what you might see as a bottoming formation or what you might consider a topping formation?
Yep, something like this. So we had this little sell-off. This was the beginning of August. We have heavy volume at the lows, and we close above it. That's a reversal pattern to me. See.
So do you use the notion of bottoming, or do you just normally say, hey, this is a reversal event?
Usually just a reversal. I feel like I've gotten caught in saying, oh yeah, the market looks like it's turning here, and it's just a consolidation before the next leg lower.
Gotcha.
So
that makes sense.
I can see it. I don't know that I traded it as much though.
Okay. All right. I tend to use that term quite a bit because what I'm looking for are the traders to have some kind of battleground. And so what I'm seeing is in gold, they immediately filled the gap. And they spiked out into resistance around 40, 47, just a little bit over the big range. And now they're sitting inside of the candlestick that have the heaviest volume of the day, right? For Friday, that is the candlestick with the top of 40.35, somewhere around there, and the bottom of 4,003. And so that's pretty interesting to me. And so I would consider this a general topping formation simply because it's sitting in a wide pocket and it's fallen into a realm of congestion. But just because I see it being toppy doesn't mean it's a short.
Okay.
Does that make
Yes.
sense?
No, it makes a ton of sense. Yep.
You could just come right back into congestion and it would be something just as well to do that. What's everybody else trading?
Yeah, curious in the chat if anyone is in a trade currently, let us know. I am looking at, and I usually don't place trades during this time memory, but it does help to set up what, looking at going through the rest of the day,
Forward. Yeah.
right? So I usually like to wait for that first 30-minute candle at least to play out. Um, but what I'm looking at here, and we talked about it, right? If we gap up and continue, is this the low for the session?
Mhm.
Looking at this first 3-minute candle here, if we get a pushback into 24,500s, I may be getting into a NASDAQ long here.
Okay.
I don't know if we're going to get that far down. There's a pretty big spread in the NASDAQ right now, 14 ticks, sometimes as much as 30 ticks. So for anyone
Mhm.
trading out there, understand that if you don't get filled where you think your order is, there is a thing called slippage.
Oh,
And
yeah.
even in sim environments, the sim environment is built to replicate the live environment. Anyone trading in a live account right now is dealing with anywhere from a 10 tick to 30 tick spread in the NASDAQ.
100%.
That's just built in risk for your trades here. I do like that this is holding this 50% here of
Mhm.
this initial candle.
Yeah.
Uh,
It's amazing how often that 50% shows up.
isn't it?
It's really amazing.
A pretty big
Well,
spread here. Let's take a look. I'm going to take a look at the S&P spread because S&P obviously it's a thicker market, so it is not going to be as wide. Yeah, we're seeing a 1 and 2 tick spread in the S&P. So again, it's still extremely thin. I'm seeing 4 up, six down in the S&P. So still extremely thin, but uh, there's a reason I think that we say a lot of traders could benefit from trading the S&P as opposed to the Nasdaq because it is so
yeah,
thin.
yeah, absolutely. Someone said, hey, look at crude, it's up 2%. Well, crude got absolutely destroyed last week, right? It really could not hold so many elements of support structure. And that started on Thursday. Really, it started being toppy on Wednesday at 62. And now it's collapsed all the way down into that 59.30 area and bouncing off the zone. But here's what I like to do with these guys. If you're wondering to yourself, where is price going? When you look at a 30-minute chart with certainly any of the commodities, but a lot of times the indices are the same way. If you look at a 30-minute chart and you can see candle after candle after candle holding a frontline support, and that breaks, heads lower, and you come back up under negative pressure, that's going to be a nice clean short for you 9 times out of 10. Now, it's going to be a scalp short because it could have a lot of motion on it. But if you stare down oil, it's going to move from one level of heavy congestion to the next candlestick structure, which is a close and then an open. That tells you what's going on. So if you look at some kind of reflexive move and you go, oh my gosh, crude, it's moving up. I got to go long. Just look to the left. And if you see a row of support that was broken, they're going to sell that break one more time just to see if they can step on some necks, right? And especially if we take a look at markets and we say, wait a second, what might it mean if more of these tariff things come into play? If we end up getting a soft employment number event, if all kinds of things might be in the mix, what we have to do is be very vigilant and let price tell us what's going on. Don't read into any narratives. Don't believe any narratives. Don't, and I know that sounds a little bit tinfoil hattish, but like this gentleman said to me so many years ago, people lie, but prices don't.
100%.
People will tell you, hey, we're long X, Y, and Z. And you look at the chart and you go, well, they might be long, but nobody else is. Right? And so that's really what we have to focus on. Let price tell us that. And when we look at oil and we see it gap out, or we look at the indices or the individual index and we say, hey, price is gapping up. Say to yourself, okay, where was the last time I saw a lot of volume in the recent past? You're going to notice those lines in the sand are telling you a story. And that story is, I'm still going to be master and commander here in trend being down. My thought is that our bounces now begin to sell because we're in a bigger mean reversion to a bigger moving average on a weekly chart, and earnings are going to help us get through the space. Big thing on the docket is, listen, if you've got family in the military,
Yeah.
October the 15th is going to be a pretty big fat day because that's when non-essential military stop getting paychecks. And so for a lot of American society lives paycheck to paycheck. And the longer this goes on, the more it's going to squeeze us. And that is going to reflect somewhere. Now, we don't know if it's going to reflect in the market because 70% of the American public has no exposure to the market. It might even be a bigger number than that. I don't know what number. I know it's big.
Okay.
And I thought, I think it's above 70%, but they might not see that, but that might mean, hey, I'm going to Target less. Hey, I'm going to Walmart less. Hey, I'm not going to buy X or I'm not going to buy Y. And my consumer confidence numbers are going to go into the toilet. Whichever one of those happens, those are the things that we have to start saying, hey, maybe we've got other things to look out for. That just means don't get married to a direction and do not think in your mind, listen, every single time the market's dipped, what price action has done is turn around and bounce right back up. Yes, it's done it in the past. Yes, you can take it, but you better have your eye on the fire escape.
Yeah. Absolutely. Absolutely. Emery, I got a question for you. Someone asked a question in the chat. This is from Andres. Do we not think that this is going to fill the gap in the equities? Do you think the equities need to fill that gap we just had?
Oh, sure.
Okay.
I think it would be not. Now, the question is, what does it mean if it doesn't? So let's go through that. What do you think it means, chat? Join in with us. What do you think it means, chat, if we can't fill the gap either in the pre-market or in the market tomorrow? What does it tell us about buyers?
Great question. Great question. I'm gonna say that it doesn't need to happen. Will it? If it's going to happen, it'll show us, right? And like you said, Emery, read what the price is telling you. But sometimes we see gaps that just get left behind. We see DJ in the chat says blind buyers or strong buyers, right? Where they're just looking for any opportunity to buy. Dakota
That's exactly right.
Dakota and I were on Wall Street on Monday last week, and we heard that there's still a ton of money on the sidelines looking to allocate, right? So, hey, thank you, Mr. President, right? We just got a 5% sell-off in the NASDAQ. Let's go ahead and allocate some of those trillions of dollars or whatever the number was that we need to allocate. So it's showing that it is a buy the dip market, where you want to call it the plunge protection team, whatever it is. Buyers were looking for an opportunity. I think We got a little extended. So if we're looking at the daily, we did get a little
Yep,
extended, right? If I'm
yep,
looking at this daily chart here, uh,
yep.
you know, there weren't many days where we were taking out prior day lows. And if I need to allocate a ton of money, uh, ideally I don't do it at the all-time highs. But whether this dip was fabricated or not, who knows? It is real. And we're seeing buyers step in for sure.
Yep, absolutely, absolutely. And in my mind, you hit the nail right on the head. This gap doesn't have to fill,
Yeah.
especially if people are thinking, "Holy smokes, I just got my opportunity to buy."
Yep.
I have seen so many people going, "Man, I really want to buy something,
Mm,
but where? Where am I going to buy it?"
right.
And so, for the longer term trader, this could easily present a solution. Now, here's the flip side. What we've seen in the futures market is a tremendous amount of selling of contracts, big 1,000 lot, 2,000 lot formations, which we don't normally see.
Right.
So the question might be, well, have they already unwound and they're taking their profits? Or does that mean there's a longer term structure sitting in the future on the side space? So my I love working with seasonality. I do it a lot. I've got a number of different tools that I use for seasonality. One of them is saying, listen, we could have a pretty rocky couple couple weeks in October, but by October the 27th, we're going to be in a full-on sprint to new highs, more than likely. And so for me, I'm going to be sitting around saying, okay, where is the market going to prove itself out? We got to get above the VWAP. Number one, we haven't done that. And we got to get up over the close of the prior day, which we have done. And so now we just got to work it out, let that first 30 minutes come in. My thought is the following: if it breaks 66.83 in the ES during the market structure pre-market, we're going to see a shallow pullback if we're going to be able to fill in this volume profile, right? At which point we can look at a breakthrough, watch it pull back. If it holds 66.82, we're off to the races. Nice long price action. First target, literally 57.30 and then 57.50. That's for the ES. That's what I'm looking at. For the NQ, here's what we're staring down. Same sort of thing. Highest volume of 30-minute candlestick formation happened at 11 a.m. Pretty unusual. We are up over the high of the selling candle on Friday from 3:30 to 4 Eastern time, and now we're coming into heavy resistance. Still looks to me like pullbacks or buy zones in the price action event, because the momentum indicator, especially that Shandy momentum oscillator, it is moving straight up in
Okay.
all of these spaces. They're just moving straight up. So the line in the sand for me in the NQ, if it breaches 24,850, sellers are going to pop in. But if it comes back and then recovers that 24,805, we could see a run all the way up to 25,134 and maybe even 25,200. So, I mean, a lot of people want to buy the dip, and I think that it's going to happen. I just don't expect it at this juncture to immediately skyrocket to a new high.
Got you. Good stuff there, Emery. Thank you very much.
Thank you.
Let's see here. Man,
Is the market open tomorrow? Yes, it is
we
open
do have a
tomorrow.
holiday tomorrow. It's a bank holiday tomorrow. But markets are
What
open.
What bank holiday is that?
Columbus Day.
Is
Yeah.
it? I was going to make a joke, but I'll save it for another time.
Right.
So there, that I did not realize that tomorrow was Columbus Day. All right, pretty good, pretty good. That will mean that the bond markets are closed whenever we have a federal holiday like that, and so could be pretty interesting. My thought is watch the currencies, right? For those of us that like to trade currencies, and I know Dakota loves trading the Nikkei. What have you guys done in there lately?
In the Nikkei, a lot of nothing for me. And I know Dakota hasn't traded it recently. We've seen some really
Interesting.
big percentage moves in the Nikkei since their most recent election, where they have a
Yeah.
new I guess it's a prime minister in Japan. Um, the day of that election, I think the Nikkei had a 5% up day, and the yen sold off pretty heavy. I might have that backwards, but it was definitely inverted, right? The yen was up and the Nikkei was down, or vice versa. And it's been seeing some pretty huge percentage days. The Nikkei is a pretty expensive contract to trade with Topstep accounts. I know there are micro Nikkei available on by the CME, but we don't have them with Topstep accounts. It's a big mover, though. It is a big mover. The
Yeah.
Nikkei up 1.36% right now.
Yeah.
Yeah, it's a big
Yeah.
mover for sure. I do. Like I
It
said,
looks
Emily,
like it looks like the NAS, right?
it
Same
does.
kind of candle.
Very similar.
Yeah.
Very
What were
similar.
you going to say?
No, I'm looking for a pullback in the equities to maybe get in here. One of
Yeah.
the things we talked about was the 50% of this daily candle from yesterday, from Friday's price action. If we start to see volume, and I may have to wait a little bit
Yeah.
for the Asia session to start, or the Shanghai session, but this first 3-minute candle is telling me a lot, right? Is this starting to look like a flagging pattern? Maybe we're holding that 50%. I don't know that I'm going to get my pullback, but I do want to be long this market.
So here's a question for you.
Mhm.
If you don't get your pullback
Yeah.
and you're committed to sort of finding a trade somewhere, what do you look for? How do you say, okay, what's next? It didn't pull back. Let me set up for my next trade.
Yeah, the volume kind of has to show potential for room higher, right? Right now, I would honestly, if I was able to get in at 50% of this candle, I'd be thinking position management and taking profits here,
Uh-huh.
because there's nothing in the volume. If I attach a VWAP to the start of this, there's nothing here saying that we have to go higher right now, right? So,
Mhm.
this is a pretty big 3-minute candle. We're talking about 100 points of profit in the Nasdaq trade in the Globex session. So I'd be thinking about position management. Maybe not taking the position off, because I do still think we trade higher. But for now, what I need to see is, okay, we have this huge range, high to low, that's 200 points. That has the potential to be the range for the entire day, right?
Yeah.
So
Agreed.
in order for me to take a trade, volume has to show that we have the potential to trade outside of this range, right? And right now it's not doing that, right? The volume is still in the middle of this range. Yes, we have this knee-jerk reaction. Hey, there's no tariffs, everything's okay. But if I had to take a trade right now, the only trade is to take a short right back into the middle of this range, because volume is not pushing us higher.
Okay, so what would show you that volume was pushing you higher?
So this
Would
red
your
line,
VWAP move up?
exactly, yeah, it has to show potential to leave the range, if not leaving the range already. So that's what I would want to see, right? I would want to see this red line leave this range. I'll show you an example of when it works out that way. So we have huge volume. Obviously, this was Friday on the sell-off. And yeah, oh yeah, in hindsight, yeah, the chart went down, right? But if we get the read of VWAP very early, the angle of that VWAP looked like it wanted to leave the range, right? So this is telling me that this is continuation volume. I need to see something like this. If we have this 3-minute candle that we're working with right now, we're actually holding VWAP from the major sell-off, which is another confluence for maybe taking a short up here, risking the high of the
Yeah.
range, maybe risking above
Yeah.
750s, because knee-jerk reaction, but no directional volume trading right now. Extremely thin market, so I just have to wait. What I'd be waiting for is this VWAP here,
To cross over.
to cross over or to leave this
Mhm.
range.
Okay. Okay. What's the white line at the bottom of your charts?
That is the ATR.
Okay. All right. Very good.
That is the
Very good.
ATR, this is the 3-minute chart, and we're talking about a 75-point ATR in the Nasdaq for 3 minutes. Uh, which is why sometimes you hear us say, "Hey, now's a great time to scale down." That's $1,500 with a mini
Yes.
in 3 minutes.
Yeah.
Um,
It's been insane.
yeah, I
It's
mean,
been insane.
yesterday on Friday, that entire sell off, we were up near $75 that entire time, right? So, uh, it's an interesting time here because it looked like on Friday, Emery, it looked like we were going to go right back into the middle of an aggressive trade war, and now
Mhm.
that's not the case anymore, right? We were talking about, hey, on the show, and Coach Paul and I did at the buzzer on Friday. We're saying, hey, if we get back to March, April volatility, we're gonna have some great trading, but it's a good time to size down. And now
Yep.
it's if we're walking it back, uh, maybe it's not. But here we go, little decent short opportunity here, up at the upper extreme of this range. I may get the pullback here. There is some size on the Nasdaq books down at price is this 650.
Mhm.
See 100 contracts bid at 24,650. So let's see if we go fill those.
Yeah. Somebody said, "Hey, gold is ripping,"
Is it
and so yeah, the 4-hour chart still shows resistance at the wicks, right?
okay?
So this 40-60. So here's what I did. I went back in the composite gold charts and I said, all right, let me look and see what happens every time we get to one of the thousands, right? And so I went back to 3,000, I went back to 2,000. 2,000 showed about $50 on either side. 3,000 showed about $60, really $70 up at the high. It went to 3,070 and then it backed all the way down to 2,950 and then it held up. What I noticed though is every time gold is coming into that big fat round number, it tends to spend days and days and days resolving in that range. So, in my mind, this is still a sell the high, buy the low formation. Price action simply is not telling us anything else if we look at the recent past. Now, some folks would go, well, this time it's different because of X, Y, or Z. And I say, hey, it's fine if you want to think that. But as far as I see, we hit 4,000. We went up $80. That's 10 more than the last time. And we went down $50. That's exactly how much we went down the last time. So you might go, hey, that's pure coincidence. Perfectly fine. I'm going to trade coincidence. Until it tells me otherwise, I'm going to wait and strike in the spots where I've seen the sellers pile in and I've seen the buyers pile in. And other than that, I'm just going to, cross my arms and wait for the next opportunity.
Absolutely. Uh, take a look. We got about 15 minutes or so left here. Emery, you were talking about the government shutdown. I think we are 8 trading days. It's been 8 trading days since the government is shut down.
Mhm. Mhm.
We did hear last week that October 24th, we are going to start getting some data. CPI is supposed to come out on the 24th. That's still 2 weeks from now.
How are they able to estimate that?
It's a great question. So I feel like somebody has the number and it's just sitting on somebody's desk
Oh,
until
gotcha.
until
Gotcha.
you
That
know
makes sense.
they can release it.
Yeah, that makes
So
sense.
I'm taking a look at the economic calendar right now just to see if there's anything that we have to look out for the week. Obviously, earnings season is starting. We got all the bank earnings. Um, those are on Tuesday. We get some of the bigger bank earnings. Of course, we're getting unemployment data, inflation data from other countries, just not from the U.S. currently. But economic calendar is still looking pretty thin because of that government shutdown.
Yeah.
Retail
And
sales might
then,
be the biggest.
the question is,
Yeah,
they've got so much backdated data.
right.
How in the world are we going to get on top of it well enough to actually have a good number for the Fed to say, hey, we're going to cut rates, or we're going to raise rates, or we're going to leave it the same? I
Right.
mean, it's a pickle for sure. It's
Uh,
definitely a pickle.
right now, looking at the Fed Watch tool, next Fed meeting is October 29th. 97% probability of another rate cut on that Fed meeting, 25 basis point cut. But like you said, Emery, does the Fed have the information that they normally use
Exactly.
to make these decisions? It does sound like we're getting that CPI data before that. So maybe so, but um,
Hard
you
to
know,
know.
the
Yeah.
29th, how much data do we get out? Like Dakota was here last week and he's just like, is it possible that we get a non-farm number 2 weeks in a row, right? Where if they release I
Yeah.
think what Jack said on TV was the backdated non-farm number gets released 5 days after the shutdown is over, and then the next one is not delayed. So whenever that shutdown happens and the next non-farm number, they're going to try to keep that one on schedule. So yeah, it's very interesting times.
Interesting. No doubt about it. No doubt about it. Someone says, hey, how can I learn more about volume? Jesus, learning about volume is as simple as putting up your volume chart and then watching to see what traders do in high volume pockets. That really is all you do. It's sort of like if you want to learn how to play racquetball, you might learn the rules, but then you just got to go play racquetball. And so the way that you learn is by putting yourself in the environment and then staring down what happens after the fact, right? And so that sports analogy might be a little bit weird for you, but sports are the only way. Being a mother of a lot of boys, it's the only way I can actually make conversation is putting things in sports references. And so it really is as simple as getting in there and just looking and saying, well, what do I see? And actually digging in rather than just saying, oh, this or oh, that or whatever. One of the main things that I see as a detriment to traders is if you become so focused on technicals that you ignore what price is telling you.
Yeah.
And so the things that Jay and I and many of the other, particularly many of the other VIP coaches, what we try to do is say, hey, listen, focus on what the chart is telling you. What are the traders telling you they're doing? And put that into words. Start building a storyboard of price action. Notice where sellers show up. Notice how differently sellers show up. Hey, they showed up here, but this was a great big positive candlestick in gold before it turned around, lost that resistance zone, and then collapsed under its own weight. Learn to tell a story and get involved with the traders who are actually making prices move. And once you really embrace the market as a storyboard of a battle between buyers and sellers and their agreement. See, right here in oil, they agreed for 2.5 hours to say, you know what? We're not selling it below 59.83. And as a trader, after an hour of that, you can go, I think I'm going to take that long into resistance. They've told me it's not going lower. And if it turns out that it goes lower, somebody else is in control, and I know that I can get out of the trade. Just try to involve yourself more and understand the story. I think that's why folks like Jay and me love the market, is that we are really interested in the story that's occurring, the fight between buyers and sellers and what they're doing. It's not a matter of us going, hey, those buyers are stupid because, whatever we see in the chat once in a while, right?
Yeah,
I'm not dropping the dime on you, Chad. It
it's a
just
lot of
happened.
a lot of opinion though.
Yeah.
A lot of opinion.
So you just have to say, listen, you can have an opinion about why they're doing it, but look at what they're doing, where they say, hey, listen, I'm not letting price go higher than this, not letting price go lower than this, and knowing that when it breaks, it means somebody else took charge. Somebody said, I'm stepping on your neck right now, dude, and you can do nothing about it.
Love that. Yeah, as much as you see patterns in anything, right? We
Yeah.
identify chart patterns. You can identify patterns in volume, and a lot of it is just spending time. I did put a link in the chat, and I'll put it again when Jesus asked that question. When we did the 150K subscriber thing, the giveaway, I did do a class on volume. So it's a 2-hour volume class. It's a lot in there. You guys can watch it if you want. If you have any questions, let me know. Ask in Discord or on that video. You can go over that, but I like what Anne-Marie said. Everything in context, right? What is the market trying to tell us? It's extremely important to take a look that way. Any trades you're seeing right now, Anne-Marie? Get gold pull back a little bit.
I think a short
Okay.
is potentially available here if we say, hey, what if we go short right here in this space, and if we can't stay below really, if we can't stay below 660, we probably need to get out. But my suspicion is we come back and test 41 maybe. So that's what I think I am seeing. Just a little bit of a fade, because my impression, folks, is that the market is changing temperament. And it's going to change it slowly because our minds change slowly. It's sort of like that friend that you love. They're awesome to be around, but they start getting super weird doing stuff that you're like, dude, I'm not even comfortable being around you anymore. I love you, man, but you're just acting weird. And so you keep them around because you give them the benefit of the doubt and you rack for a while until finally you're like, dude.
Had enough.
Yeah.
Had enough.
We can't play together anymore. Get out of the sandbox. And so that essentially is what I think the market is doing. And so it's going to lull people in to buy the dip for the next couple of weeks. It's going to lull them in to buy the dip. And then it's going to come back, short a little, shake around. It's just in a giant volatile pocket. And we have to realize that in volatile pockets, we have to be in the space of see money, take money. For those of us that are looking for this massive 500-point move to the north, who knows whether it'll be there or not? The 500 move to the south, the 500-point move to the south was certainly there. But, prices do unusual things when traders start becoming unsettled about direction. And what we had on Friday was a lot of forced selling. Folks that trade algorithmically, when it breaks a level, they have forced selling into support. And I suspect this is what happened in the charts on Friday. The question is, how strong are the traders and how confident are the buyers? I'm not sure they're that confident. That's the one thing. Somebody said, hey, I've got a trade in on gold. It's long. What do I want to look at on the upside? My thought is the following. The top of the range currently in gold is 40.62. Beyond that is 40.72. And beyond that is 40.81. And so you can legitimately walk straight up there, or the price action sort of chops you around. I think clearly we can see from the daily picture that the open of Thursday at 40.62 is going to be that wishy-washy space. Now, here's how gold traders like to trade these kinds of messy patches. They have the range. They know it's a reversal event. What they do is they'll push out of the range. They'll shake out the shorts that are trying to trade the top in a short. They'll suck in longs that think price action is going to extend, and then they're going to collapse right into the range. And so just remember, that's what traders like to do in gold. You can see them do it over and over again. This was the area. 40.71 was the measured move off of the big fat round numbers that I did doing my analysis. It got into there. It broke out, shook out all the people who were short. Then it pulled back and brought everybody else into the short, retested it again, and they did the same thing to the traders before price action broke down. So that, just remember that that's the game they like to play. So don't buy a breakout here. Wait for it to resolve in the proper direction so you know which way to go. You can either buy the pullback or you can short on the release of this 40.72. You know, we just did a measured move that showed it might have room all the way up to 4,200, you know, so there's a lot of stuff going on there.
Definitely is. I do have, and again, anything we say here is for educational purposes only,
Exactly.
not any investment advice. I did put in some bids here in micro Nasdaq, down at
For
620.
long?
Yeah, for a long, down at
Mhm.
625.
I like
So
it.
I still need a 60-point
Love
pullback here.
that.
We are
Yeah.
kind of holding you up right now. You can see it on my chart, this red line here.
Yep.
It's holding as a support. What I'm looking for is just a flush lower, maybe to tag this 50% of this opening candle again. And my target would be up here at the highs of the candle. Really the only thing I'm seeing. I'll leave this order out here for a little while. If we get closer to 8 p.m. Eastern time, so about an hour and 15 minutes, if I don't get tagged into this by then, I may just cancel this and then wait to see how the volume when the Asia session opens up.
Yeah, that's a good plan. I like that plan a lot, actually. And I love the line that you have because it's clear support that became resistance, that
Right.
became support again at the opening event, right at the base of that VWAP.
Right.
So I absolutely love all the correlations that sit right up in that space. What is that price again?
I have it at
24,100?
24,625. It's pretty
All
much right at 50% of this candle.
Gotcha.
Actually, it could probably go up
Gotcha.
a little bit, 628s. But
Yeah.
there's someone bidding higher than that, right? I see 255 contracts bid at 24,660 in the Nasdaq, which is like 30 points higher. But really, what I want, I don't, because I'm expecting, again, this is a 200-point candle to open the day. Actually, it's bigger than that. 300 points?
Pretty
No,
big.
200 points. 200 points in the Nasdaq. I don't want to. There's a high probability that this range is the range for the day. So I don't.